Hello everyone, this is Rahul Jakaria from Sharekhan. Welcome back to exciting 3R actionable stock updates. 3R basically means right sector, right quality and right valuation. These are our investment ideas. Today we have an update on Mahindra Lifespace developers. Our analyst has a buy rating on a stock with a price target of Rs 736. Considering the strong scalability in the business over the next 5 years, well supported by the realty upcycle. It had reported steady residential sales booking and healthy collection in Q3. Industrial leasing had gained significant traction. The company has a strong launch pipeline of Rs 4,000 crore in the near term, of which Rs 2,300 to 2,400 crore projects are targeted to launch before the current fiscal year end. Post concluding Rs 2,300 crore business developments, it expects to close 1 to 2 deals during Q4, while overall BD pipeline remains healthy at Rs 5,000 to 6,000 crore. Next, we cover Jyothy Labs. Our analyst maintains buy on Jyothy Labs with a price target of Rs 590. Stock is corrected by 25% from its recent high and trades at 41 times its FY25 and 35 times its FY26 earnings. Domestic volume growth of 11% is ahead of some large peers for past 3 quarters. Management is confident of maintaining volume-led double-digit revenue growth and targets operating profit margin of 16 to 17% in FY24. Distribution expansion in new markets, product launches, market share gains in key categories, and expanding into new categories would help Jyothy Labs to achieve consistent double-digit revenue growth in the coming years. Last, we cover SRF Ltd. Our analyst maintains buy on SRF Ltd with an unchanged price target of Rs 2,745. The ramp-up of recently commissioned PTFE and aluminium foil facility and SRF's commitment to its medium-term capex plan of Rs 15,000 crore bodes well for growth. Although there are short-term concerns on HFCs and inventory rationalization in the agrochemical space, SRF is a quality player, strong collaboration with innovators and dedicated customer contracts, and also holds strong long-term earnings growth prospect given the support of China Plus One strategy by global players. SRF focus on fluoropolymer space, HFOs and new AIs, ramp up of pharma business and introduction of VAP in packaging film would provide platform for sustainable strong earning growth over medium to long term. Investment in the right areas of specialty chemicals would drive at 11% PAT CAGR over FY23 to FY26, along with healthy ROE of 18.9% and ROCE of 19%. At current market price, the stock trades at a reasonable valuation of 25 times its FY26 estimated EPS.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.